Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me at the desk at the MarketSite studio in Times Square, New York City, we have Maddie Radner. She's director on Nasdaq's Market Intelligence desk. We'll also be bringing in our resident technical analyst, Joyce, managing director on the mid as well. Maddie, it is great to have you with us. Welcome to Trade Talks.
Thanks, Jill.
All right, let's talk about how the market is digesting the FOMC comments from yesterday. It feels as if, we got the reaction yesterday, kind of going back and forth today. What has changed? How do you think the market is perceiving this?
Yeah, so the Fed meeting yesterday really set the table for multiple rate cuts to come in 2024. The Fed is expecting 3 rate cuts while the market is expecting at least 6, which is really crazy. The market's initial reaction yesterday was a sharp move higher in stocks and a sharp move lower in yields. And there was a really impressive rally heading into yesterday's close. We saw the Dow surpass 37,000 for the first time. We saw the 10-year yield back down to levels last seen in August. We also saw many companies hit new 52-week highs, including 27 companies in the Nasdaq 100, 88 companies in the S&P 500. And that rally has really continued into today's session with the strong retail data that we did see. There's a little bit of a slowdown today as investors have digested the news a little bit, and this kind of pivot with the Fed was anticipated back in November. So today it's more of a digesting of news.
I mean, you have to figure with the move that we've seen in November and even through the first couple of weeks of December, it feels as if a lot of this has been priced in, and I think that's a debate that we're going to be having, certainly till we do get to the rate cuts. Is it a sell the news kind of event? Who knows? I want to talk about the small cap space for a moment here, which is where you play on the Markets Intelligence desk. We're finally seeing participation there because we've been worrying about the concentration in the Mag 7 or, Nasdaq 100 type stocks. But, for the first time, let's call it 3-4 years, you're seeing some significant participation in small caps.
Yes. So on the Market Intelligence desk, we do work with a lot of small caps and speak with them daily. They're finally getting some spotlight and they're finally getting some ground, and their performance is definitely seeing some rotation. They've had a rough year so far, particularly in this higher rate environment. From January to October, the Russell 2000 was down about 6%, and the Russell Microcap was down almost 13%. So it's been a hard time for them. Small caps do have a greater sensitivity to higher interest rates, particularly healthcare, biotech, who are kind of waiting for products to fund down the line. They're relying on lower interest rates to raise capital for different research projects. So we're finally seeing a reversal, as you mentioned. Russell indices are actually both green year to date. If you had asked me a few months ago if I would expect that to happen, the answer would have been no. So we are very surprised. Obviously, there's been a lot of focus this year on the Nasdaq 100 and the Magnificent 7, which does make sense because the Qs are up well over 50%. Which is extremely impressive. But there's a shift to a more risk-on perspective. Investors are willing to kind of get risky and kind of rotate back into some of these different sectors, such as REITs, banks, healthcare.
Yeah, I mean, even when we saw some of the rallies, from 2020 to where we are now, you just never got, the small caps just really never got any momentum behind it. So really, it's encouraging to see that broaden out a bit. So with that said, let's bring in Joyce. He is managing director on Nasdaq's Market Intelligence desk, also our chief technical analyst here. Brian, let's follow on some of Maddie's comments here. Let's take a look at the 10-year, because I think after the FOMC came out with its comments yesterday, the move in the 10-year, I think, was one of the most impressive ones that we've seen in just such a short amount of time. 20 basis points is a lot for that kind of move.
Sorry there, I think I had the mute button on, Jill, but yeah, impressive move for sure. We've been in a downtrend since late October. And the key levels during that move lower, to me, I was looking at 4.34%, and then to a lesser degree 4.09%. And so yesterday we knifed right through that 4.09%, and then today we're seeing the downside follow through down below the 200-day moving average, and to a low of 3.93%, which is right about where we are now. So if we look at just at a line chart here, so kind of remove some of that intraday noise and just closing prices only, we could see that we're settling right now right around that 61.8% Fibonacci retracement, retracing the uptrend from the April lows earlier this year, which is right amidst that bank turmoil, to the October high. So at the moment, as we've broken through a number of support levels, we're now at 393, 395. That's, I think, the next key barometer to harp in on it. If that gives way, there's some minor support levels, all the way down, in the 38%, 3.8, 3.85 area. But really, if we break, down below there, the 3.3, 3.4 range is, I think, in play for the 10-year. So right now, I think this is a key level for the yield right here.
Let's get a broader look at the market. Pull up the S&P 500 for us.
Sure, S&P 500. So very similar to the Nasdaq 100. It's within about 1 or 2% from its all-time highs made back in January of 2022. We did have this nice breakout this week above that 4,595, let's call it 4,600 level. That was the highs back in the summer, and it was also some key pivots back in the early stages of the 2022 downtrend. So, if we do hit these new highs at 4820, the highs from 21, early 22, then potentially we could see some backing and filling right there. We do have some overbought breadth measures and overbought, more importantly, the momentum measures that should really focus on. So anything is possible as far as near-term retracements. But when you do hit those overbought measures, typically that's it's reflecting obviously bullish price action. Typically those are a sign of good things to come over the longer intermediate to longer term.
And finally, Brian, let's get a look at the small cap space. Bring up a chart of the Russell with some fresh technical levels for us.
Yeah, so here's the Russell 2000 here. This is the daily period. We could see that it's been breaking out. Yesterday had a phenomenal move higher, and it got back above its highs from early September. And we zoom out a little bit and we look at the weekly picture here. We could see right back to the top of this range that we've been in really since the lows of June 2022. So that range is 1640 up to 2015, 2020. So we're now really testing that level right now. This is what we peaked out around in August and previously back in February. And then this goes back to August of 2022 as well. So the more times you test the level, the more important that level becomes. With the overbought measures right now, we haven't seen the daily RSI this high since December of 2020. That was in the middle of a very strong 12-week run where the Russell 2000 gained more than 41%. It was its third best 12-week rolling performance ever in the history of the index. So we certainly, in the very, very near term, could see a little bit of consolidation here. But historically, a high RSI reading like this does bode well. In December of 2020, the index went on to get up to gain another roughly 18% into its March 21 high. So not necessarily that this is going to happen again this time, but given the breadth of the move, we've been talking about the breadth really since the first week of November. Those breadth thrusts that have been triggering. Yesterday's announcement by the Fed. We had some commentary from Treasury Secretary Janet Yellen about rates coming down, needing to come down as long as the inflation measures continue to come down as well. It's really just been dovish support from the policymakers, and we're seeing the productive action, the constructive price action, in, as Maddie noted earlier, groups like financials, real estate, that previously were strong underperforming groups as well, biotechs, et cetera.
All right, Brian, appreciate the technical insight. As always, thank you for joining us. We'll catch up with you next week. And Maddie, to wrap up here, so we got one uncertainty out of the way. We know that they're going to start to think about rate cuts for next year. What else are you going to be looking at going into the new year?
Yeah, so I think all eyes will continue to be on the economic data that comes out, the ongoing disinflation narrative, strong economic data, and now even more increased confidence that the rate hike cycle is done and rate cut cycle will begin, will really provide a nice runway for stocks to continue to see nice gains into the new year.
All right, Maddie, appreciate the insight. Thanks for joining us on Trade Talks. And thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.